what is the current health of the U.S. and global economy? Our answers are a barrage of critical economic releases from the U.S. and global economies affords us the opportunity to take a much needed mental break from trying to assess the size, sequence, and scope of the pending fiscal, regulatory, trade, and net financing policy changes in the U.S. and how they may interact with the economy and asset markets in a near record year for global debt refinancing demand. While we will be tasked with reassessing those upside and downside scenarios all year, so it is important that we maintain a high quality baseline of what is actually happening on the ground. Regarding the U.S. economy, the latest data from the U.S. manufacturing sector were highly supportive of our resilient U.S. economy theme. Regarding the Eurozone economy, the final December CPI data were supportive of our grid model forecast for inflation to trend higher over the medium term. Regarding the UK economy, the December retail sales data were supportive of our grid model forecast for growth to bounce and stabilize in Q4. Regarding the Chinese economy, the Q4 GDP data and December activity and property market data were supportive of our grid model forecast for a transitory bounce in growth in Q4. While Beijing is stimulating more forcefully than it has in recent years, it is far from stimulating forcefully in absolute terms. Indeed, after months of disappointing stimulus headlines, we do not view China's current policy mix as supportive of a sustained recovery in the Chinese economy. Investors should anticipate a deepening of China's balance sheet recession throughout 2025, albeit at a slower pace than in prior years. Treading water would likely feel like a win for Beijing in a year where incremental U.S. tariffs are likely to force a meaningfully and potentially destabilizing depreciation of the Chinese yuan.